been first class, as you say, allowed me to create ClearBank, has allowed many businesses to be established. The issue that we have at the moment is those businesses are still in growth, so they need capital to survive. And if they're lenders, they normally seek that capital from the wholesale markets. In the global financial crisis of 2007 and 2008, there was a huge liquidity disappeared, capital froze. There wasn't any. Nobody knew where the money was. All they knew was there wasn't any. And so everything ground to a halt. This time around, this crisis is somewhat different. A, it's a medical crisis. B, the banks are well capitalized, so they do not have a liquidity issue. What's happened, though, is the wholesale market that the alternative market use has dried up, and costs of finance in that area have gone through the roof. So if you're an alternative lender looking to provide support to small to medium-sized businesses, you could be faced with a wholesale market cost of 10% for the money that you want to lend. And by the time you've added your costs on board for that and the servicing costs, you're looking at about 16 to 18% for a loan to support a business. Well, that doesn't work. A, the business can't afford to repay it, and B, you'd be regarded by the government as being usury in relation to trying to do something to help the crisis that we're all in.
So it's not a sob story for the business that you represent. I mean, it's saying you want to help the businesses that need the liquidity, but basically you've got to be given a sort of an even playing field to be able to then turn on that powerful muscle that was created by the British banking institution, if you like, the FCA and so forth, to work in this kind of environment.
Well, when Rishi Sunak announced that, eye-watering number of 330 billion going in to try and sort this mess out, massive number, 10 out of 10 for that, taking the initiative and getting to grips with it. But the time it's taking for that money to move into the marketplace to have an impact is not quick enough to save many businesses from failure.
Yeah, and there's, I suppose, the perception of people out there reading the paper is the government has done a great job and it's given the money and it said it's 100% guaranteed. So why are the banks all kind of putting obstructions in the way, be it the banks or the alternative lending industry? And that is because ultimately what the bank's saying is we'll back you if the money is not paid back, meaning the risk is still with the bank. So they've still got to do their checks to make sure that it is good business that they're doing, even though they might be sort of being rather more slack on the reins than they would normally be.
I think the issue is the alternative lenders aren't in the panel.
They're not even in the panel.
They're not even on the front line helping sort this out. And for whatever reason, they've been left out of the whole equation. And the proposal that we put forward, which has indicative support from both the Bank of England, the FCA, and PRA, all of who know what we're trying to do here, was to provide a liquidity conduit from Treasury money. Taking some of the 330 billion pounds that's being claimed is available, channeling that through to the alternative market, and letting the alternative market get access to wholesale money at costs that make sense for our economy, not for themselves, but for our economy. Then allowing them to lend that using the lending tools which they have available, which is their business as usual, into the marketplace to accelerate the distribution of those funds, to speed up the if you like, the financial lifeblood into the economy, to prevent the economic catastrophe that potentially will run out of the medical emergency.
Yeah, absolutely. So, and with that sort of conduit, with, as we know, the sort of better real-time, up-to-date analytics that are generally available through that market, you'll be able to sort of track and trace that money, where it goes, what it's used for, and as it gets returned back to the Bank of England over time, as people pay back their loans, you'll actually have a sort of a throttle that you can speed up and down somewhat better, what one would imagine. Is that right?
That's right. Exactly that. With the whole process, including the return of the funds in due course, was put into place in the scheme. The difference was we looked to provide £150,000, and that wasn't based upon just saying, oh, we want £150,000. What we were trying to do was look at the cash flow requirements of the businesses we were trying to help through the crisis. It's an identical sum of money to the sums of money that are being advanced in Switzerland, France, and Germany. And what they found in those countries is that the businesses tend to use these loans almost like a government MasterCard or Visa card,
Mm.
and they draw down a portion of the loan to meet their cash flow requirements. And in Switzerland, I think on average, most of the borrowing has been about 25% of the initial granted loan, because most business people actually would like to save their business, get
Sure.
it through the crisis and come out of the other side. So there's been some quite, conservative or considered approaches to how these funds are being drawn down by the businesses themselves.
So where are we up to? Where I know you've put this forward, and there's a group of you, and it's gone to all party working committees and so forth. Where are you up to? What's the kind of the request that you're making, if you will, so that we all know where you're up to?
Well, what we've been doing is we've been onboarding lenders. By the end of this week, we'll have 70 plus lenders up on the platform, ready to go. And we just want basically the HMT or whatever to say, look, we have the British Business Bank. They're doing a great job. All right. Not knocking them, but they need some help. All right. They need to have another direct route into the marketplace so that we can actually spread our distribution. This is normal, business. Every business person understands this. You sell more product by having greater distribution. What we want to do is have that distribution activated so that we can start putting through schemes into the marketplace. And I personally feel there is a very strong argument for an additional scheme of around £150,000 to be put into the marketplace to give a longer buffer for the businesses that we're trying to support. Mm-hmm. Because it will be disastrous if we, put out a lot of money on the bounce back loan scheme, which is great, to then find that the businesses that have got it have failed.
Absolutely.
If that is what happens, that money should have been given as a grant, and the money should have been given to local authorities to distribute to businesses that they had some knowledge over.
Absolutely. Nick, I want to ask you just to sort of wrap up, and it's kind of full stop new paragraph, if you will. But with my sustainable finance head on, a lot of us are talking about post the fire of London, the houses were built out of straw and wattle and daub, and the insurers gave them the money, but they said build back with brick so that we build back better, and this doesn't happen again. The last thing we want to do is add a burden to people at this time of reporting and responsibility. But is there some clever caveat that if you're getting these loans, what we'd also like to see is that you're taking into account climate change and the natural environment and so forth. As there is a lot of regulation coming that way anyway. Can you tie these together, or is that just almost a crass thing to say?
I think that, ironically, the world has changed in the last 6 weeks, and you move away from the human disaster that COVID-19 is, and then just stand back for a second. How many grandparents would ever have used Teams or Zoom? It just would not have happened. All right, and yet everybody is now using video conferencing for communication because they have to. How many businesses have now distributed their teams, and their companies are operating from homes across the United Kingdom and wider afield? And they're actually finding that it's working, and the efficiency that they're getting is greater. And one of the things that we've been going on for years about in the UK is productivity is low. Well, it is low if you spend 3 hours a day on a train and the underground going to an office to sit in an office, when actually you find that you do far more work when you're sitting at home. It's more enjoyable. So I think that there will be a natural change, and certainly within the portfolio of companies that I'm involved in, we've already started that process to reduce our London sites, to reduce back our costs in relation to building costs and all the rest of it, travel costs. They will have a positive impact on the environment. I mean, last week, you'll know this, last week there was a report saying that the skies got bluer. Well, it's sort of one of those things you say, hang on, check the date again. Are we back at April the 1st? But it's true. And if you look at some of the reports that are going on around the world on social media about the Ganges becoming clear, about the Himalayas becoming visible, everybody's starting to experience a different world, which they probably have never experienced.
Yeah.
And so I think that I agree that sustainability, moving to a way that we protect our planet, is likely to be an automatic outcome of this crisis. So I think you're going to get that effect happening because of the way that people actually find that they can live and choose to change the way that they work and live in a way that's better for them, ironically better for the businesses that they work for, and finally, far better for the planet we all live on.
Amazing. Well, a fantastic point to stop on. Thanks for focusing on obviously the immediate crisis and the need for liquidity as you've described, but also let's think about that sort of further horizon as well. So Nick, thanks for today. We'll talk again, I'm sure. This is going to be a running story. So appreciate your time.
Richard, thank you very much as usual. Cheers.
Cheers now.